This is a chart of SanDisk, SNDK. This is a daily chart, and we want to talk to you about why it's so important to keep an eye on market direction. And I'm talking about intraday now, because all of our trades are based on the daily chart, but more based on the intraday activity as how it relates to the broader daily chart. So you can see SanDisk gapped way down today. I know they had an offer from Samsung to be bought around 26 a share or something. That's why it gapped up this day. They turned it down, said it wasn't enough, and well, you can see how well that's worked out for them. Gapped down today to around, let's see, it opened at 10:45. Now I'm going to zoom in on 5-minute candles for today. Okay, now in a typical market, and believe me, we're in anything but a typical market. SanDisk would have run. Now there had to be a lot of people out there thinking that gap down was way too exaggerated, way too overdone. Let's go to like a 3-day chart. I mean, you can see it closed around 15 yesterday and opens down around 10. So you know there's millions of people watching this thing. Let's zoom back in on today. And on a typical day, these are 5-minute candles. So by 15 minutes in, this thing breaks its 15-minute high right here, which was 1069 was its 15-minute high. Right here, on a typical day, you're going to have everyone, look at the volume here, like 4 or 5 million shares, 6 million shares in that first 15 minutes. Everyone who shorted this thinking it's going down even farther, they're going to panic and start to cover, and you're going to have bottom feeders that are kind of have, excuse me, confirmation that, hey, look, it is overdone, that gap down, and they're going to start buying, and you're going to get some kind of squeeze there on a typical day. So what we want to talk about, I want to zoom in a little bit so you can see this a little clearer. Okay, these are the opening candles again. This line we superimpose over all of our intraday charts, and it is the SPY, basically the entire market. It's S&P. And the reason you wouldn't want to take this as it's breaking this early high, in a typical market, I think you get a big run out of that, right? But right here is where it triggered, and look at the SPY line, slanting down and getting ready to take out the low of the day, and the market was already down substantially. So that is why right here you would not take this trade, and that is what's so important about having the SPY line. So you get a general view and a quick snapshot view of what the market's doing. This thing's getting ready to take out its lows for the day, and it's already gapped down a couple hundred points. You don't want to be going long anything right there. So just remember, always have that SPY line if you're making any trading decision. Something's getting ready to trigger according to your method. It doesn't have to be our methods. According to your plan and strategies, you've got a long trigger setting up. You got an SPY line like this. Good idea to pass on the trade.